Hey everybody, I hope everyone is doing well and had a good day. Thank you for joining me for today's end of day review. And in this one, I'm just going to review the first hour or so of the Emini 5-minute chart for Tuesday, February 3rd, 2026. The context going into the day, if we're just looking at the 5-minute chart, we can see that the market is in a trading range. The bars to the left, mostly sideways, lots of overlapping bars, breakouts not going very far, failing to break out to a new high, break out to a new low, reverses back up, test the highs, reverse down, and we're going back and forth. On the open, small gap up, rally on bar 1 to the high of the range, the high of the trading range and the high of yesterday. Traders can view this as it's basically a second leg trap. Bull breakout bar 80, pull back, and then a bigger second leg on bar 1, the tail of bar 1, the upper tail. And of course we found sellers at the high and the bar closed below its midpoint. So technically bar 1 is a bear reversal bar. Market's in breakout mode. I said that we're in a trading range, so breakout direction here is probably close to 50-50. Bar 2, we have a bear breakout bar. The problem with bars 1 and 2 is all of the overlap. You know that on a smaller time frame chart, even if bar 1 sold off into the close, you know there's a pullback before the bears got follow through selling. So we can see through here, it's kind of a leg 1 pullback, leg 2, but reversal and follow through for the bears, it's enough selling that there's probably sellers above bar 2, and the reversal and follow through will probably get a second leg down. And that's what we see on bar 3. So the reversal and follow through signal from the high of bar 1 to the close of bar 2. Then we place, that's the 1R measurement, place that on the high of bar 3, and bar 3 reaches that leg 1 equals leg 2 measured move. So again, the problem here for the bears, now there's a couple of problems. We have all the overlap, like I mentioned, with bars 1 and 2. So we know it's a channel on a smaller time frame. A channel is a trading range that is sloped, in this case, sloped downward. So on a lower time frame, and we'll look at this in a moment. Turn off snap mode. It's basically a bear channel with lower highs and lower lows. Bar 3 is breaking below the channel line, and it's happening at different levels. We talked about this bear channel line yesterday. Clearly the market is finding support. Every time it touches this line, it bounces. Test it again, we rally. Test, bounce, testing it here, rallying. So probably going to bounce here again. But a 3-bar micro channel probably will get a second leg down. The only problem with selling here is you're selling in the buy zone. You're near support. You've already got 3 legs down on the lower time frame. 1, 2, 3. And we'll talk about that maybe side by side with a lower time frame chart in a moment. So the point is here, 3-bar micro channel, strong enough breakout signal for a second leg. But also the concern is that the lower time frame has now had 3 legs down that might be nested, and we may get a correction before, or a pullback before the second leg down. So rather than selling the close of bar 3, maybe wait and start selling a pullback, maybe a 25% pullback, 50% but in any case, better probably to wait to sell a pullback. So bar 4, strong looking bull trend bar, but it's an inside bar, so not a breakout bar. It's actually a trading range bar. It's completely within bar 3. And because of the context, this might be a buy vacuum test of resistance. So we talked about possible 50% pullback, is testing it there. And then a bear breakout bar, bar 5. So bears might be getting their second leg here. And then follow through selling on 6. It's okay if you don't stay short here. Hard to stay short. If you're selling here, you're probably scalping. But then we get bar 6, and that probably resets the leg count to some degree. Yes, you can argue there's a bear channel, and we're breaking below it. But when there's a breakout this far below a structure, you have to consider the possibility that the market cycle is resetting. We're in a trading range up here. Breakout direction was 50-50. Now we have a big breakout bar with an even bigger follow-through bar. 5 isn't that great. There's a lot of overlap, but 6, a really strong breakout bar for the bears. Even bigger than the breakout bar preceding it. Far below all the bars to the left and closing near its low. So important to get short. It's always in short on bar 6. So sell the close, sell a pullback. And you saw me measuring kind of like this. First it's bar 1 and 2. That leg 2 measured move was reached on bar 3. Then it's bars 1 through 3. That measured move target was reached on bar 6. Now it might be 5 and 6. So I'm looking at it this way. Probably get some sort of measured move down. And also, interesting thing about bar 7. If you take the breakout bar alone, bar 6, so the high of 6 to the close of 6, we'll turn on snap mode again. So that's the high of bar 6 to the close of bar 6. Put that on the high of bar 7. You can see the reaction at that leg 2 measured move. Now, bar 7 closing around its midpoint, maybe even above its midpoint. So probably entering a channel phase or a weaker part of this breakout, but still always in short, sell the close, sell above bars. And again, the bigger target, 5 and 6, is still a magnet. It's a magnet below the market. So look at bar 8. Is that going to reverse all the bars to the left? Probably not. If you're a price action trader and you're trading breakouts and second legs, there's no reason to buy, at least not yet. So you're either short or you're flat. Continuing lower, inside bar 10. So again, an inside bar like 4 is a trading range bar, not really breaking out of anything. It's more of a sell the close bar. You can expect lower prices. We still have not quite reached that profit target. A leg 1 equals leg 2. And the reason I'm measuring bars 5 and 6 is because the breakout began on bar 5 and then continued with follow through on bar 6 and then 7. I said it's a much weaker bar, maybe closing around its midpoint. The body looks like it's less than half range of the bar. So this is more channeling behavior. So it's kind of a spike and channel. And I'm looking for a measured move target based on the initial momentum, 5 and 6. So brief shell pullback there. And that's the beginning of the second leg. And it's fractal. So yes, this is leg 1, leg 2, but on a higher time frame. This entire sell-off is a micro channel. It's a simple leg on a higher time frame chart. Look at the 15-minute. So that's just a simple bear breakout leg, and that needs a second leg of its own. 1, 2, 3 pushes down to a magnet support. It's actually a measured move based on 5 and 6, projected straight down. So that was reached on bar 12. So there's a reaction at that measured move target, but is bar 12 enough to buy? It's a strong enough reversal bar that you're probably going to get a second leg sideways to up, but I'd be more interested in looking for ways to get short than ways to buy for a scalp. So bulls might make a scalp here. This might be a minor reversal, but the bulls have to do more than bar 12 to convince me that we're going a lot higher. And we get trading range price action. There's the bulls. So reversal bar 12, two-legged pullback to 15. The bulls buy the deep pullback. They get their second leg. Now 16, a second leg trap, a possible second leg trap. Leg 1, pullback. Leg 2, against a strong bear trend. And testing resistance. So 16, probably a sell to close bar, big risk. It's a second leg against a fairly strong bearish regime. So better to sell 16 or wait, not a very good buy. So I want to keep today's video short. Oh my goodness. I want to keep today's video short, and as much as I want to keep talking about it, 19, there's a solid bear breakout bar, sell to close. Context is good, low 2 at the moving average. And I mentioned this big bear breakout needs a second leg down. That's ultimately what we got. I'll talk briefly about the end of the day as well. You can see bears getting there. Leg 1 equals leg 2. Measured move. Is this enough to buy? No. It's basically a sideways to down low 2 in a bear trend. There's been no significant trend line break. So if anything, bar 44 is a sell to close bar. It's kind of like 16. Shape is different, but tight bear channel, 2 legs against it. You can expect a bigger second leg down. Same here. Tight bear channel, 2 legs against it. You're expecting lower prices. This is a minor reversal. Still always in short, so sell for any reason. At the end of the day, kind of interesting what happened. Bulls finally break the trend line. That's enough of a surprise for a second leg. You can maybe look for 50% pullback, find support there, 2 legs down to the 50% pullback. You can draw it different ways, breakout follow through. There's your 50%. Bulls probably going to get a second leg, trading range now more likely. What happens here? The breakout follow through gets a leg 1 equals leg 2 measured move, and then we get a new breakout 73 with follow through 74. So what happens here? Breakout follow through, pullback, bulls reach their leg 2 measured move, and you can see the reaction to it. So it's very interesting that you see these breakout and second leg patterns over and over repeating. And then we can talk about, let's see if I can I should have a workspace for this. This one should work. I just wanted to compare maybe the 1 minute chart to the 5 minute chart today in the first hour, or even the first 30 minutes. Yeah, I just want to talk about these, the first 3 bars of the day. Just turn on the session break so we can see there's the start of the day. And then get the 1 minute chart up. What I was explaining earlier, again, these first 3 bars, it's a bear reversal bar with a pullback, a second leg down. another pullback, and a third push down. And it's actually a parabolic wedge. The third push broke below the channel line. Channel line here, 1, 2, 3 pushes. Third push exceeding the channel line. We can draw that on the 1 minute. First push, second push, third push. So the expectation is a correction, maybe 10 bars, 2 legs, maybe a 50% pullback, something like that. But ultimately, it's a tight enough bear channel that any reversal is probably going to be minor and then be followed by trend resumption in the direction of the parabolic wedge. Parabolic wedges are minor, which means the wedge is happening on the smaller time frame, the lower time frame chart. On a higher time frame, like the 15-minute chart, it's simply a strong bear breakout bar or bear reversal bar. It looks something like the second bar on the 1 minute chart. So what happens? The channel pulls back about 50%. The bull's strong enough breakout for a second leg, but at resistance against the tight channel, the bulls fail. The high one fails, the bears sell the low one, and they get their leg 1, leg 2 measured move. So I just thought that was interesting. Alright, that's going to be it for today's video. Thanks again for sticking around till the end. And for more price action resources, please check the description of my videos. Alright, thanks again, and I hope everyone has a good night.